Let's talk Alphabet. It is underperforming under pressure.
I mean, look, this Gemini rollout was a joke. I mean, it's ridiculous.
I'm just saying that if you were sitting at the poker table and looking at the hands and saying, do they have the same pocket aces in the age of GPT that they had in search? I think it's almost impossible for you to say that that's the case.
And that to me is the red flag here. Who's running the ship at Google and allowing this stuff out of the door? This isn't just a minor battle. This is a huge battle, and they're falling behind.
I don't think there's a single person out here that is arguing that AI is not some kind of fundamental phase transition, Clay Christensen's disruptive wave or whatever.
Google's business and stock have come under pressure more recently. Google experienced yet another PR disaster and is really fumbling its execution in the AI race. And some investors even believe Google stock will go to zero. And while Google stock is still up an impressive 56% over the last 12 months, for the last 3 years, the stock is only up 37%. And if we extend the time horizon to 5 years, we can see that Google is really lagging behind some of the other big tech names and only on par with the Nasdaq over this period. And this year, Google stock is down around 10% from the January peak. And so of course, there's a lot to talk about in this video. So what I will cover in this video is 2 bearish takes on Google stock from 2 prominent investors that fairly recently outlined why they believe Google may be a big loser over the coming decade. I will share my own as well as Bill Ackman's perspective, which differs quite a bit. And finally, I will outline my demands and discuss what is needed for the stock to deliver great returns for shareholders. So without further ado, let's get started. Alright, so let's start with the first chapter, which I titled Yet Another Shitstorm. Or can artificial intelligence be too politically correct? So what I would think is that most of you are very aware of the most recent misstep that Google has taken. And that's not Google's first misstep. No, when they launched their AI solution Bard around a year ago, they really messed up their demo. I think there were even some factual errors in the public demo. And as a result, the stock dropped hard. I think it was down around $100 billion during a single day. Like, I'm not quite sure, but the stock definitely traded below $100 a share. And now quite recently, Google decided to rebrand its AI solutions. So first they had Bard and another solution was branded Duet, and now they rebranded all of it and want to cover it under the Gemini umbrella. And the most recent misstep was primarily related to the image creation AI solution. So what basically happened is, depending on the kind of prompt, the image generator created factually wrong representations. Like, for example, you could create images of black Nazis, quote unquote diverse founding fathers, black Vikings, or female popes. And as a result, Google received a major backlash online in particular, because they are perceived to be overly political, overly politically sensitive, and as a result, less focused on the accurateness of the information, which is their actual mission. And if you take a look at the Google AI principles, which they themselves outline on their website, you can find the following points. So they write, number 2, one of their principles is to avoid creating or reinforcing unfair bias. AI algorithms and datasets can reflect, reinforce, or reduce unfair biases. We recognize that distinguishing fair from unfair biases is not always simple and differs across cultures and societies. We will seek to avoid unjust impacts on people, particularly those related to sensitive characteristics such as race, ethnicity, gender, nationality, income, sexual orientation, ability, and political or religious belief. And in some weird and paradoxical way, Google failed its mission and harmed its own principles here, because obviously there were no black Vikings. And yeah, as I highlighted it, Google is criticized for being overly quote unquote woke here. And that is something that the guys from the All In podcast also discussed on one of their most recent episodes. And I particularly like the take by Friedberg here. I don't remember his first name right now, I apologize. And what he discussed is that there is a shift going on regarding Google's business. So in a way, they have to successfully make the transition from an information retrieval business to an information interpretation business, as AI prompts simply differ from the search queries you would usually go to Google search to. So let's quickly hear what he had to say.
So I think one of the big changes that Google's had to face is that the business has to move away from an information retrieval business, where they index the open internet's data and then allow access to that data through a search results page, to being an information interpretation service. These are very different products. The information interpretation service requires aggregating all this information and then choosing how to answer questions versus just giving you results of other people's data that sits out on the internet. I'll give you an example. If you type in IQ test by race on ChatGPT or Gemini, it will refuse to answer the question. Ask it 100 ways. And it says, well, I don't want to reinforce stereotypes. IQ tests are inherently biased. IQ tests aren't done correctly. I just want the data. I want to know what data is out there. You type it into Google, first search result and the one box result gives you exactly what you're looking for. Here's the IQ test results by race. And then yes, there's all these disclaimers at the bottom. So the challenge is that Google's interpretation engine and ChatGPT's interpretation engine, which is effectively this AI model that they've built of all this data, has allowed them to create a tunable interface. And the intention that they have is a valid intention, which is to eliminate stereotypes and bias in race. However, the thing that some people might say is stereotypical, other people might just say is typical. That what is a stereotype may actually just be some data and I just want the results. And there may be stereotypes implied from that data, but I want to make that interpretation myself.
All right, so generally I agree with the criticism that was articulated on the podcast. I think it's fair criticism. Accuracy and truth should be the primary objective of search engines. And that's actually the mission statement of Google itself. Let me just read the mission statement of Google to you. So their mission is, Google's mission is to organize the world's information and make it universally accessible and useful. And producing factually wrong images is of course not accurate, it's not useful. And the decisions made at the business level should not be made based on ideological principles. So what I should say is I'm a Google shareholder and I think Google absolutely should not deviate from their mission statement because I think they follow a very important mission that makes lives of people better, but only if they not deviate from that mission. And in this context, I want to cite what Warren Buffett recently wrote in his most recent annual shareholder letter. So he wrote just one little sentence here. Berkshire benefits from an unusual constancy and clarity of purpose. And I'm a little worried that Google is using that constancy and clarity of purpose. And this is something that Ben Thompson also addressed in one of his most recent essays. So let me just quickly read one little paragraph from that essay to you. So he wrote, even if you don't want to go so far as to invoke the political implications of Orwell's book, the most generous interpretation of Google's over-aggressive RLHF, and just for clarification, that stands for reinforcement learning from human feedback. So in machine learning, it's basically a technique that tries to align an AI agent to, some kind of human preference. So the most generous interpretation of Google's over-aggressive RLHF of the models is that they are scared of being criticized. That, though, is just as bad. Google is blatantly sacrificing its mission to, quote-unquote, organize the world's information and make it universally accessible and useful by creating entirely new realities because it's scared of some bad press. Moreover, there are implications for business. Google has the models and the infrastructure, but winning in AI, given their business model challenges, will require boldness. This shameful willingness to change the world's information in an attempt to avoid criticism reeks, in the best case scenario, of abject timidity. And I think Thompson raises a couple of interesting questions here. First of all, what does this misstep mean for Google's business? Short, mid, and long term. And of course, as a result, what does it mean for Google's stock? And I have many thoughts on this particular question. But first of all, let's hear the perspective from another investor who's rather bearish on Google's business and its stock, Brett Gerstner from Altimeter. So let me show you another clip here real quick.
Here's my fundamental position. Search is going to be replaced by agent-led information discovery. I see it every day. My 15-year-old son says, Dad, I don't use Google anymore. I just use ChatGPT. I talked to 2,000 people at the Javits Center. How many people have used ChatGPT instead of Google over the course of the last 2 days? 1,000 hands in the room go up. I asked my analysts who are sitting on their desk. They're replacing their use of Google with ChatGPT. We are having a fundamental structural shift in how people retrieve and discover answers to the questions they have. So Google is going to have to compete in this new thing, okay? Meta's going to compete, Apple's going to compete, Microsoft with Copilot, ChatGPT, etc. There are going to be 6, 7, 8 incredible competitors there. Google will be one of those competitors. And let's assume that they're a very competent competitor because they have all of these assets. The question to you, what do you think the likelihood is that they're going to reconstruct is dominant of monopoly in this new thing as they have in search?
So
facing innovators' dilemma, facing the cultural challenges they have, I would just say as an investor, Josh, and I have a ton of respect for you, the discount rate that you need to apply to this investment is much, much higher today than it was 2 years ago. 2 years ago, there was no challenger. Google was the only game in town. Now we know search is being replaced. I'm just saying that if you were sitting at the poker table and looking at the hands and saying, do they have the same pocket aces in the age of GPT that they had in search, I think it's almost impossible for you to say that that's the case.
All right. So just to be fair, I think Gerstner, just like the guys from the All In podcast, raises some very valid concerns and questions. And I could see why people believe that this may be the beginning of the end of Google, the tech behemoth. No one is one of the best business models in the world. Is it going to be yet another Kodak or BlackBerry? So a company that was the most innovative leader in their respective field for quite a long time, but then for whatever reasons, failed to keep up with the pace of innovation of competitors. Because obviously, with the rise of AI, the nature of search queries is changing. There's no doubt about that. And investors will now have to assess the likelihood of Google being able to keep its market share in the new way of searching for information online. And what I want to do here is, Brett Gerstner was just sharing some anecdotal evidence. I want to now take a closer look at cold hard data. So what we could do is we can take a look at the market share of Google search compared to its competitors. And what you can see here is that basically, despite all of the bad press that Google received over the last 1.5 years, and despite OpenAI and ChatGPT definitely doing a lot of things right. And of course, we also have to throw in Microsoft and their AI solutions as well. Well, Google's market share in search is basically unchanged. It's still sitting at around 91-92%. And interestingly, recently an unsealed document from the Google antitrust case showed that Microsoft has spent $100 billion on Bing over the years to achieve a measly 3% market share in search. And so as a Google shareholder, I want to focus on the data. And as soon as I see a shift in consumer behavior and that shift of behavior is reflected in the numbers, well, then I might get worried. But this is not what we are seeing in the data right now. And just to share some more bullish thoughts on why Google stock may actually do well over the long term. Well, first and foremost, I think as an investor, you have to ask yourself, well, obviously Google is facing a problem, but is this a fixable problem or is it a permanent problem? And I absolutely believe it's a fixable problem. And to quote from the Stretchery essay once again, the Google Gemini fiasco shows that the biggest challenge for Google in AI is not the business model, but rather company culture. Change is needed from the top down. So I think, and this is something I will get to a little later in the video anyway, but I think Google has all the tools, the data available to be a big winner in the AI race. And what seems like the main cause of the most recent hiccups at an operational level seem to stem from people, from the people working at Google, and obviously also the management team. The leader of a company is the most important figure when it comes to instilling the right culture. And to me, it seems like Google is, quote unquote, a little too woke. To me, it seems like, as Ben Thompson highlighted, is a little too careful, too worried about the public perception of their moves. And I would argue they are also moving a little too slowly, which of course is somewhat related to the second point. And all of this represents a real risk, because there is the very real risk that consumers are changing their behavior because of the missteps Google has taken. And the consumers, maybe besides the data Google has, is definitely the most valuable asset of Google and any company, to be fair. Now, to get back to Brett Gerstner here and the anecdotal evidence that he has shared.
My 15-year-old son says, Dad, I don't use Google anymore. I just use ChatGPT. I talked to 2,000 people at the Javits Center. How many people have used ChatGPT instead of Google over the course of the last 2 days? 1,000 hands in the room go up.
Let me just share my anecdotal evidence, and that is something that actually Joseph Carlson also addressed in one of his most recent videos. If I take a look at my social circle, I don't see a whole lot of people using ChatGPT all the time. No, to me it seems like it's a lot of tech-savvy people, the people I engage with on Twitter, for example. Of course, they're, or they want to be at the pulse of time. I'm not sure if that's how you say it in English, but you get my idea. But the more average consumer, I see them using Google for almost all of their search queries. They haven't changed their consumer behavior, and this is reflected in the numbers that we just looked at. And what I can also tell you is that my experience in school is that using AI search queries is also more difficult than using Google. So some of my students, they really struggle with coming up with the right prompts and the right follow-up prompts to really benefit from the power that chatbots can provide. And generally speaking, it's important to discuss the different use cases of online search queries. So funnily enough, I was using ChatGPT, which, to be fair, I use for most of my AI search queries. So I use ChatGPT to come up with different kind of search queries. So you've got information retrieval search queries, where you're basically just searching for factual information online. Maybe you're looking for historical facts, definitions, or answers to specific questions. Obviously, then another use case is online shopping and looking for information about specific products. Maybe you're trying to find the latest news on a specific topic, event, or trend. Maybe you're looking for a new job, for holiday destinations, and so on and so forth. And in a way, I would argue that Google here is searching as a website navigation tool. And then you've got other search use cases, search queries that are more creative in nature. And that is where I think the strength of chatbots really shines. So for example, I sometimes use ChatGPT to come up with ideas for videos. Maybe it helps me write the introduction for a video. Maybe it helps me create a list like the one that I shared with you just a second ago. Maybe it helps me to summarize key information from text or transcripts. And what I will say is that, well, most of my search cases are not creative in nature. And this is why I actually predominantly still use Google in my everyday life. And I think, and that's maybe the last point here on the different use cases, I think those use cases and search queries are also most valuable ones from a business point of view. Because if, say, I'm looking for a cheap flight or to whatever, obviously this search is much more attractive for people that want to target that specific search term. So for the customers of Google and the ad products. So I want to challenge you to not only think about market share and different use cases of online searches, but also the monetization opportunities of different search queries. Okay, in the introduction, I said that I will also share what Bill Ackman, who recently appeared on the Lex Fridman podcast, had to say about Google. If you're not familiar with Bill Ackman and his take on Google, he's definitely bullish Google, and his fund is also an investor in Google and owns quite a sizable stake. So let's take a look at his short pitch on Google's stock.
It's a business we've admired as a firm for, 15 years, but rarely got to a price that we felt we could own it because, again, the expectations were so high and price really matters. One way to think about it, when a business becomes a verb, that's usually a pretty good sign about the moat around the business. So, you open your computer and you open your search, and very high percentage of the world starts with a Google, page in a one line. Where you type in your search. The Google advertising search YouTube franchise is one of the most dominant franchises in the world. Very difficult to disrupt, extremely profitable. The world is moving from offline advertising to online advertising, and that trend, I think, continues. Why? Because you can actually see whether your ads work. They used to say about advertising, you spend a fortune and you just don't know which 50% of it works, but you just sort of spend the money because ultimately that's going to bring in the customer. And now with online advertising, you can see with granularity which dollars I'm spending. When people click on the search term and end up buying something and I pay, it's a very high return on investment for the advertiser, and they really dominate that business. Now, AI, of course, is a risk. If all of a sudden people start searching or asking questions of ChatGPT and don't start with the Google search bar, that's a risk to the company. And so our view based on work we had done and talked to industry experts, is that Google, if anything, had by virtue of the investment they've made, the time, the energy that people put into it, we felt their AI capabilities were, if anything, potentially greater than Microsoft ChatGPT, and that the market had overreacted. And because Google, is a big company, global business, regulators scrutinized it incredibly carefully. They couldn't take some of the same liberties a startup like OpenAI did in releasing a product. And I think Google took a more cautious approach. And they also have huge advantages by virtue. You think of all the data Google has, like the search data, all the various applications, email and otherwise, and the kind of the Google suite of products. It's an incredible data set. So they have more training data than pretty much any company in the world. They have incredible engineers. They have enormous financial resources. So that was kind of the bet. And we still think it's probably the cheapest of the big 7 companies in terms of the price you're paying for the business relative to its current earnings. It also is a business that has a lot of potential for efficiency. Sometimes when you have this enormously profitable, dominant company, all of the technology companies in the post-March 20 world grew enormously in terms of their teams, and they probably overhired. And so you've seen some, the Facebooks of the world, and now even Google starting to get a little more efficient in terms of their operations. And then there's all kinds of what we call optionality in all the various businesses and investments they've made that are losing money. They've got a cloud business that's growing very rapidly, but they're investing basically 100% of the profits from that business in growth. So you're in that earnings number, you're not seeing any earnings from the cloud business. And, they're one of the top cloud players. So,
all right, so Ekman in that clip highlighted a couple of advantages and strength of Google's business. So he highlighted that Google has access to a ton of data, more than any other company around the world, which is incredibly valuable when it comes to machine learning and training AI algorithms. And of course, on top of that, Google also has the financial resources to constantly improve their solutions. Then there is the Google ecosystem that is maybe different to the Apple ecosystem, but maybe just as valuable. So you've got all of these interconnected tools like Google Maps, Google Search, of course, and email, so Gmail, Chrome, which has 64% of the market share in the browser space. You've got cloud computing with Google Drive, you've got YouTube, and then you've also got the hardware division of Google. And obviously also Android as an operating system for mobile phones. And this ecosystem, I just compared it to Apple's ecosystem, can also be quite sticky. So quite recently, I actually, quote unquote, called someone out on X because that user, he seems like quite a smart human being. He was writing a very long thread on why he wants to quit Google and all of their offerings. And this post went viral. I think it reached around, certainly more than 1 million people. But then I just highlighted his conclusion. So let me just read it to you. He wrote, "And that's why, as of this weekend, I've started divorcing my personal life and taking my information out of the Google ecosystem. It will probably take a year, having invested in nearly everything from search to Pixel to Assistant to more obscure things like voice. But it has to be done." And as I said, this individual doesn't seem like your average individual. To me, he seems like quite a driven, hardworking person. And I would argue that your average Joe is not going to take on the effort that is needed to really make the switch from Google and their entire ecosystem to an alternative offering. And arguably, you might actually have to go for multiple offerings to get the same value out of these digital tools. And then finally, I also want to address the scale advantages that Google has. I already mentioned their financial resources, but obviously their sheer scale also allows them to reduce the cost per search query. However, on the other hand, more bearish investors would highlight that AI search queries in general are much more expensive than your typical Google search query. Now, towards the end of the clip I showed you, Ekman addressed the valuation of Google. Because after all, whether you make a good or a bad investment depends on the price you pay. So the best business in the world can be a poor investment at the wrong price, and a pretty bad company can be a great investment at a great price. And Ekman highlighted that he believes Google is, among the Magnificent Seven, one of the cheapest stocks, if not the cheapest stock. So let's take a look at the numbers. So right now, Google is trading at earnings per share of 25 times over the last 12 months. It is trading at 70 times operating income over the next 12 months, and it's trading at a next 12 month free cash flow yield of 4%. And what Ekman highlighted is that those numbers are not reflecting yet the earnings power potential of Google's cloud division. So if you zoom out, say, 5, 6, 7, 8 years, and the cloud division, which recently turned profitable, will be much more profitable, well, then the company may actually be cheaper. Because as I just explained, the true earnings potential of the cloud division is not reflected in the current last 12 month or next 12 month numbers. Well, personally, I'm rather optimistic when it comes to Google's future. I think actually the trajectory of the business has widened. So I think the range of outcomes is much wider for Google today than it was, say, 3, 4, 5 years ago. And I think investors have to account for that, either by applying a higher discount rate or by demanding a higher margin of safety. At the same time, I still think Google generally and all of the assets they have, like don't forget about YouTube, for example, is a superior business and will likely still be around 10 years from now. Obviously, I don't have a crystal ball, but I'm fairly optimistic on that. However, those multiples that I just referenced aren't low enough to get me really excited. So while I am a Google shareholder and I have no intention of selling my shares anytime soon, I'm also not a buyer here. And I actually came across an interesting tweet that Brad Gerstner referenced in his podcast. It's from Vivek Goyal, and he basically shared that the number of search queries only compounded at a rate of 4% annually between 2013 and today. And most of the revenue growth, which compounded at a much higher rate for Google, comes from added monetization and a higher ad load, and maybe also better targeting. Okay, this brings me to the last chapter of this video, my demands for Google as a Google shareholder. So I have a couple, and I will actually reference Pythier Capital and what he wrote on Twitter because I agree with the points he mentioned. The first one is to fire Sundar Pichai and replace him with some kind of interim CEO while you're looking for a new CEO, which ideally should be an internal candidate. Now, what I will say is that Pichai has done a good job ever since he has become CEO of Google. So he stepped into the position of becoming the new Google CEO in 2015, if I remember correctly. And the company has performed badly between 2015 and today. So I can just show you on screen the revenue growth over that time period and the operating income growth. But at the same time, and I've said this before in the video, I don't like the current business culture at Google. And to me, the whole business seems a bit bloated. Too many people, too high stock compensation expenses, and the business is just moving too slowly.
But a great leader has great followership. Over the course of their career, they'll have a team they've built that will come follow them into the next opportunity. But the key is, really the top person matters enormously and then it's who they recruit. You recruit an A+ leader and they're going to recruit other A type people. You recruit a B leader, you're not going to recruit any great talent beneath them.
Then secondly, Pythier Capital demanded the announcement of a dividend. I think this is something that I actually addressed in a recent video. I think it was my video on Meta, in which I predicted that I think Google and Amazon will also announce a dividend fairly soon. And then finally, he argued that Google should become cash neutral by 2030. And I think generally the capital allocation decisions made at the management level at Google have at best been okay to average. And just to get back to Ben Thompson, he's also calling for Pichai to step down. He wrote, Google quite clearly needs a similar transformation as Microsoft. The point of the company ought not to be to tell users what to think, but to help them make important decisions, as Larry Page once promised. That means, first and foremost, excising the company of employees attracted to Google's power and its potential to help them execute their political program and return decision-making to those who actually want to make a good product. That, by extension, must mean removing those who let the former run amok, up to and including CEO Sundar Pichai. The stakes, for Google specifically and society broadly, are too high to simply keep one's head down and hope that the San Francisco Board of Supervisors magically comes to its senses. And I can only encourage you to listen to the Bill Ackman, Lex Friedman podcast, because on this podcast, the role of the board of directors was frequently discussed. So I'll make sure to link the video in the video description. Yeah, and I guess that's it for today. Let me know what you think of the whole Google situation, whether you think Google is an attractive investment here or not, and where you see the business 10 years from now. Take care.